back to the deliberations of the Citizens Monetary Policy Committee hosted by CNBC TV 18. We have in attendance Chairman Dr. Pronab Sen and members of the committee, Samiran Chakraborty from Citi, Soumya Kanti from SBI, Sajjid Chinoy of JP Morgan and Sonal Verma of Nomura joining us from Singapore. Well, Dr. Sen, the Reserve Bank has kind of not allowed us to outguess its dovishness or hawkishness. The guesses have been wrong, but you got it right last time. What is your sense on February 8th? Should they worry about the growth and inflation trajectory and therefore come with a cut?
Well, of course they should worry about the growth and inflation trajectory, but they also should be a little careful about what's happening in the banking sector. You know, as I think somebody mentioned, the pass-through is complete. But it's not just complete. What's going to happen is as the remonetization process progresses, you're going to see upward pressure on bank interest rates. The MCLR is going to change upwards.
But why would you say that the lending rate will go up, sir?
For the very simple reason that as the currency leaves the accounts, the balance between the different forms of deposits is going to change. So the huge decline that you saw in the MCLR is going to reverse itself. The question is how far.
On that, Samiran, what is your expectation? At the moment, I think it's a 6 lakh crore excess, about 3 lakh crore in MSS bonds and about 3 lakh crore going into reverse repo. When are you expecting the situation to reverse? And would that be one of the calculations before the Reserve Bank moves on February 8th?
Well, we are slightly surprised that the outflow in January has been lower than what we were expecting. So it appears that the money is a bit more sticky in nature. But as Dr. Sen mentioned that at some point of time, this money can flow out. At this moment, if this money does not flow out fast enough, then we are already seeing that the MSS proportion is coming down and the reverse repo proportion is going up. And if RBI wants a neutral liquidity situation to finally come back, then how long will it wait for that neutral liquidity to come out from about 6.5–7 lakh crore of excess liquidity that is there in the system? So, but it might not be a call which will be made in February itself. It might be deferred to April to get a better idea of how things are panning out. It can be even within the two monetary policy committee meetings. But it's something which is definitely important because it will guide the overall interest rate scenario and have a bearing on the RBI's policy rate as well.
So a CRR hike is not on the cards at all, however temporary.
Oh, no, I would not imagine that at all. I mean, I think the point here is the RBI thinks that, at least for the most part, policy rate cuts are done. We've got maybe a little bit left. The focus was how do you get the transmission. As it turned out, we got much of the transmission because of demonetization. And I'm of the view that the yield curve could, of course, change if the RBI cuts or doesn't cut. That could normalize, especially given what's happening globally. But I'd be hard-pressed to think that lending rates would reverse because when banks cut lending rates, they had the expectation that only some part would remain. I think the next leg of transmission is that once the process is liberalized, you might see deposit rates being cut so that bank net interest margins are preserved. So the way I see it is that because much of the transmission has happened, that will give the RBI a little bit more elbow room that, you know, what we worried about all this time has finally gone through.
So, Shami, you also don't expect lending rates to go up for banks?
No, as of now, I don't expect, because I also share the same view that there is still scope for the deposit rates to go down from the current levels, because once the remonetization is complete, I think banks will definitely take a call on the deposit rates in the, if not this fiscal, at least in the next fiscal beginning.
Okay. Well, now for the rupee angle. Actually, that was brought out even by the economic survey, though they argued that the rupee is not as overvalued as the Reserve Bank's data indicates. The Reserve Bank's RER indicates that the 36-country measure keeps the rupee 18% overvalued, actually 18.64 to be precise, so 19% overvalued, a historic high. And it was 17% overvalued when that big fall came, I think in 2012. It was to some extent overvalued even through early 2013, the first 6 months, accounting for the taper tantrum taking a big chunk off. So, Sonal, from the rupee angle, do you think a cut is warranted and that the rupee ought to depreciate?
Well, I think, a central bank shouldn't try to target too many variables using one policy instrument. And it is not clear that the rupee will depreciate if you do a 25 basis point rate cut. And B, more importantly, it's not clear India will suddenly become very competitive because of X% rupee depreciation. We all know that there are many other factors that go into making a country competitive, whether it's productivity, infrastructure, and many other things.
My fear is, Sonal, my fear also is that if the rupee is way out of whack and is 18% overvalued or 19% overvalued, it may work to edge it to depreciate merely to avoid a quantum fall when maybe global factors become volatile.
Yeah, I mean, I think how much rupee is overvalued, first of all, depends on the metrics you're using. And simply based on real metrics, the extent of overvaluation that they show may be an overestimate. So if you actually adjust for productivity, the extent of overvaluation is not much. So I don't think rupee should be a consideration, at this stage.
Okay. Well, fair point. Fair argument, though I would still seriously worry whether the rupee has become a little overvalued and whether it's almost a time like in 1997, Dr. Reddy talks down the rupee.
Can I take issue with this description of the rupee being overvalued? I think just because the RER was at 100 some years ago doesn't mean that was fair value. Okay. Fair value is a very complicated, dynamic phenomenon. I think it's very glib to say that there's an 18% overvaluation. I would agree with Sonal that if you were seeing secular loss in market share or secular increase in non-oil, non-gold imports, which is also not the case, it's hard to make the argument. What you can say is the stability of the nominal effective exchange rate masks certain bilateral imbalances. What I worry about is the India-Chinese exchange rate. The rupee has appreciated 9% versus the CNY in real terms in the last 15 months, and China accounts for 40% of our trade deficit. So there are certain bilateral imbalances that can get accentuated. But broadly, I think it's not responsible to say necessarily that you get that you are so overvalued.
Okay, yes, certainly. Well, Dr. Sen, we have put as many elements as possible to discuss how much space is there to cut for the Reserve Bank now and in the near future, in all of 2017.
Well, the space I don't think is the issue. The real issue is that is the RBI in a position where it can actually give an indication of its forward thinking as the signaling value. I think given that the budget has been a lot more benign than anybody had expected, I think it is time for RBI to also start thinking about signaling.
Okay, and signaling that more dovishness, you mean?
That's my view, yeah.
Yep. Sonal, what's your view? How much space is there in 2017?
Well, I think in the bigger scheme of things, there isn't much space. I think for India to sustainably get a 4% inflation, I think the structural constraints have to be removed. And therefore, I think that is still going to be a challenge. And second, I think I completely agree with Sajjid. I think, we are focusing a lot on domestic factors, and were monetary policy based purely on domestic factors, I think space was probably a bit more. But in the context of global factors, i.e., oil prices going up, interest rate differentials already having narrowed so much and likely to narrow even further, I think space is actually not much in the. I mean, if you look at through 2017, we are almost at the fag end, I would think.
Okay, Samiran.
We have several issues. We have a sticky core inflation issue. We have a slightly more longer-term risk on global reflation seeping onto Indian inflation. We have an issue that a government wants to have farm income doubling by 2022. You cannot have that with food inflation at 2% or even below. So if you put all this together, our sense is that the FY18 average inflation could be higher than the FY17 average inflation. That leaves very little scope for rate cuts. We've already seen most of the transmission happening in FY17 itself. So if at all one more rate cut is possible, maybe we keep it up our sleeves and use it at a time when we have the global factors in favor of us. So I would probably wait at this juncture.
Soumya, you have to quickly wind up. How much space?
Yeah, just very quickly, I think the RBI is at the fag end of the rate cycle now. Because if you look into the, for example, just take the data on yield differential, it is corrected by 115 basis points. So that's first thing. The second thing is that irrespective of whether the RBI cuts or not, yields are unlikely to decline significantly from the current level. So basically those two are diverse. So in any case, if there is plentiful of liquidity, the transmission will continue to happen. And in my sense, the only thing the RBI should now think of is the timing, because Fed is going to hike possibly 2 to 3 times during the year. So whether if they have a space for rate cut, whether they want to do it now or whether they want to do it later, that's the call which the RBI has to take based on what cycle they believe they are in. So in my sense, the cut for the rate cut scenario looks almost at the fag end, and possibly another 25 could be the best thing under the need of the hour.
Sajjid, how much space does the government does the RBI have, and is the word accommodation also likely to perhaps last only one more policy?
So I agree with everybody. I think we're probably looking at 25 basis points more of space for all the reasons mentioned. It comes back again crucially to the first question. When do you want to get to 4% and how do you view the world? The more threatening the world economy is, the less space there is. So I think about 25, whether they use it now or April will be very much a judgment call of where the right timing is. I think accommodative is just, in the past what's happened is when you had rate cuts that the market did not expect, but you didn't give the indication that there would be more, you sort of stamped on your own transmission. So I think accommodative is just a placeholder to say, listen, if at some point in the future space opens up, we won't be stubborn about it. We will utilize that space. There's no point spooking markets for the sake of it. Then you cut interest rates and yield curves still steepen because people say, oh, we've come to the end of the cycle. So what's the value with that? So I think they would still say accommodative, but we have to read the tea leaves now that given all that's happening globally, probably 25 basis points more.
Okay, judgment call on whether it is going to be done in February or April. And may I ask our Monetary Policy Committee to pick up their pens and write out what the call is. Is there a cut? First, the chair, Dr. Sen. Okay, that's a 25 basis cut. Samiran? It's a pause. Soumya, what's your expectation? Hold. Okay. Sajjid, what are you expecting?
I think just given how responsible the budget was, maybe now is the right time, 25 basis points.
So it's a cut and it's 25 basis
points.
Okay. Well, Sonal, what is the action first? Okay, 25 basis cut from Sonal as well. So since there is a majority already, the chairman and Sajjid and Sonal are voting for a cut, but there are two members who are voting for a pause. So it looks like it's going to be a narrow decision. So difficult time for the Reserve Bank, and possibly it will be a narrow vote this time. You may not get a unanimous vote this time from the Monetary Policy. Let's wait and see. Thank you very much for joining me in the deliberations of the Citizens Monetary Policy Committee.